Q1 numbers are concerned, you are already knowing we had a PAT of around 2000 crores around. Generally, historically, Q2 is normally subdued as compared to Q1. And that should be the trend, because that is a general trend of the global phenomenon as well. But whatever is our expectation, we should be able to meet that.
Okay. Yeah. As me and Ajay were talking to you as well, I think for company like HPCL, just looking at a GRM rebound is not the right way to look at how the performance could be, because now there are a lot of other factors working. You are on an internal efficiency improvement drive, which is actually leading to quite a bit of cost rationalization, which helps, I think, in your bottom line performance as well. Tell us about these measures.
No, actually we are focusing on 3 or 4 areas specifically. One thing is definitely our infrastructure and be ready for the future. Come 2020, we will be rolling out BS6 specifications.
Okay.
So in line with this, we are upgrading both our refineries. That's one. Second thing is we are bringing along with this upgradation, the bottom upgradation projects, which helps in improving the GRMs. So both the refineries have got the projects to upgrade of the bottoms, which improves the distillate yields, which improves the GRMs. Third thing is we are further strengthening our marketing infrastructure to cater to the increased demand. We are augmenting our depots, terminals, pipelines, LPG plants. So, and this is on the top of a already existing robust infrastructure. The third part is we are concentrating on our operational efficiencies. We want to ensure that we are on the ahead of the performance curves as far as costs are concerned, because as the competition comes, the person who can produce, place and purchase at the lowest cost will be able to beat any competition. So we are making specific and sustained efforts in this direction, and some of these are reflecting and some of these will reflect,
I'm sure.
So, but there is an effort and there is a strategy behind it to ensure that we are up against the wall.
How should an investor look at HPCL going ahead? Would it essentially be a factor of what the volume growth will be? Because I mean, the fact that petrol will probably grow at 10-12%, diesel 4-6% is all well known. That probably accounts for 60-70% for your business. Is that the plain vanilla simple arithmetic to look at HPCL, or other factors that you're doing? I think in FY16, if I'm reading a note, you take into account a lot of opportunistic factors. Bitumen was a key factor in FY16. Are you robustly looking at working on such aspects too?
Yeah, HPCL is placed slightly uniquely in the sense that we market more than what we produce. So while somebody may think that this is a sort of a weakness, that our supply positions is we have to depend on others, but in today's environment that is a strength, because we got more flexibility to choose our supplies and leverage the availability of opportunities in the market. And HPCL had been a marketing company, a refining and marketing company, and we had been, though we come from a mixed culture of public sector and the private sector, originated from private sector and then turned out a public sector, but we operate like in any other private company as far as the business is concerned. And we do place the aggressiveness, a premium on as far as our marketing efforts are concerned, while catering to the requirement of the social needs of the country. We do see our opportunities in terms of industrial goods, in terms of, as you mentioned, one of the things, bitumen, like lubes, for example. We are one of the largest sellers of lube in India, and we have constantly maintained that position. We have the biggest lube refinery in India. Even let's say LPG, non-domestic LPG even, or a bulk LPG even. So we had the leadership positions in these segments, and we are continuing to innovate ourselves on those fronts. Even the non-fuel income on the retail outlets, we have leveraged. We were the first to come out with the ATMs on the fuel retail outstations.
Right.
And today we have the maximum number of ATMs on our outlets in the country compared to anybody else. Yeah. So there are opportunities, and there are thinking, and that does help in improving the bottom lines apart from just the GRMs or just the marketing margins of fuels. And apart from that, we have also done substantial part in financial re-engineering in terms of bringing down our interest cost. You might have seen that in last 2 years we brought down our interest cost to almost half.
Is there scope for further reduction?
We are constantly looking at the opportunities.
Of course.
And the international market as well. Those are also posing certain opportunities.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ET Now Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.